Joining me today is Ross Love, the Chairman and CEO of Structural Monitoring Systems, ASX code SMN. Ross, welcome to MarketOpen.
Good to be here.
Can you start by telling us what the business does? I understand that there is a focus on 3 business segments and that you're operationally based in Kelowna, Canada. Can you break down those for us?
The first business segment is Avionics, which is a business that designs, develops, manufactures, sells and supports avionic equipment, so audio and radio and data transmission equipment for the special missions fleet market. The special missions fleet market comprises aerial firefighting, law enforcement, paramilitary, border control, emergency services, and a range of fleets that have very demanding operational requirements. The second business segment is contract manufacturing, which manufactures products for that same market but for other companies. It was the original basis of the company, continues to be important. Our third segment is our structural health monitoring business, which provides solutions for monitoring cracks in airframes, the commercial airline industry, starting with our first product, which is based on our own CVM technology. CVM stands for Comparative Vacuum Monitoring.
The recent $8 million capital raise would have provided some certainty and level of confidence moving forward. Can you give us an overview of how it went, where that capital will be directed, and how you're progressing against your short and medium-term forecasts?
Yes, we're very pleased with the outcome of the recent cap raise. We raised fresh capital from new investors, about $5 million. The balance came from existing shareholders, including our largest shareholder, Drake Management in the US, which was a big vote of confidence. We've been able to retain, as we said we would, 80% of those funds for investment in new product development and some tuck-in acquisitions. And after now almost 6 months of really strong operating performance, we're in a position to start making some of those investment decisions with that money. What the cap raise has done, together with the restructuring that we undertook late last calendar year, is put us in a position now, we're now a company with 20% annual growth, 20% free cash flow from our operations, and a great deal more financial stability to pursue the full range of our business opportunities in the market today.
Ross, what sort of value do you expect this to generate moving forward?
So the value in this business is coming from our avionics business, where we remarkably have the opportunity to be the leading provider of specialist avionics equipment to this highly specialised special mission fleet market. It's a market that's growing. If you think about firefighting, border control, emergency services. But more importantly, the rate of change of the technology is providing opportunities to integrate with good software and good platforms more of the avionics functions, and to incorporate and embrace new ways that people are using data in this market. A really nice example is contract firefighting services get paid for the amount of water they deliver on the targets that they're given. They now use cameras, not our cameras, but we integrate the functionality to prove that they've dropped the water on the appropriate spot, which then becomes their invoice. So there's a clear trend in this market towards more technology, more communications, and that's a great opportunity for us.
The restructure of the company was delivered also at the end of 2024, beginning of 2025. Can you talk us through the rationale for the restructure and what it has and is expected to achieve?
Yes, the rationale for the restructure was that we had been growing quickly, 50% a year, each year for 2 years in a row. But we didn't have sufficient control over our fixed costs, and so we weren't converting that growth into free cash flow. It was clear we needed to resize our fixed costs and to generate now a sustainable pattern of growth with free cash flow, which then enables us to continue to reinvest in the growth of the business.
The avionics side of the business is clearly high margin and performing strongly for the company. Given the strong momentum from the USFS approval of the firefighting radio, what strategies are being implemented to scale production and manage lead times?
The opportunity that we've taken as part of the restructuring is to look at our manufacturing operation for the avionics business, where we have reasonably clear forecasts on the sort of demand we can expect to have to meet. That means we can scale our production to be much more predictable, and so we are now essentially manufacturing to forecast or plan rather than manufacturing to order. That has a lot of benefits, including particularly the efficiency of our own operation. But in terms of lead times, it means that we can have stock available for immediate purchase and installation. Where products require some customization for a particular fleet, we can have them 80% ready and do the last 20% of the work once we have the order. That's shrunk our lead times from many, many weeks, 8 to 10 to 12 weeks, to 0 in the case of the standard products, which is most of them, and from months to weeks for the customised products. It's a dramatic improvement in our ability to serve the market.
Can you provide an indicative unit price for the USFS-approved MTP136D radio? And what is the estimated revenue opportunity from the 3,000 federally regulated aircraft now eligible for installation?
So the Forest Radio is our leading product at the moment. It's relatively new, but after the initial market acceptance of the product, we were confident enough to increase the price by 25%, so it is now around $25,000 per radio. And we've seen just continued enthusiasm and take up for the product to the point where there is more upside on pricing for this company. The market that opened up to us with the US Forest Service certification was the contractor firefighting market in the US. That market alone is 3,000 aircraft. We are less than 10% penetrated in that market as we stand, so it's a market that our current prices is a $75 million market. But I want to emphasise that's one product in one particular geographic market. The radio product we're also selling in Canada, and we will start to sell it in other parts of the world with some modifications for local frequencies. And then again, that's just the radio. We have audio systems, we have loudspeakers, we have other integrated software platforms to service this market. So although some people will say the special missions fleet market is relatively small compared with the military market or the commercial passenger aircraft market, from our perspective, it's very large, almost limitless growth. And it has the additional advantage of not being large enough to attract the attention of some of the major communications multinational players.
You've mentioned in the past that the avionics side of the business is twice as profitable as the contract manufacturing side, which originally underpinned the AM business. What does the future look like in terms of contract manufacturing for the business?
So the contract manufacturing business is a relatively low margin business because they're other people's products and other people's IP, and they take on the responsibility for stocking and selling the products and so on. So we aim for a manufacturing margin of around about 30%. We're not quite there yet, but we're making steps to get there. On the other hand, when we sell our own products, our own IP, we are seeing margins consistently above 60%. So it's essentially twice as profitable. But it's not just the profitability from a margin perspective, it's the potential for growth. And the potential for growth in our avionics products is significantly larger than the potential for growth in our contract manufacturing business.
There has been significant tension of late between Canada and the US amidst US tariff situation. I understand that your products are largely tariff-free. Do you expect this to continue? And does this apply across all SMN AEM products?
The tariff question was clearly an issue for us until it was resolved, and it was resolved by the current administration announcing that they would stick with the existing free trade agreement between Canada and the US on a range of specified products. All of our products fit within those specifications and have the appropriate certification. So we are essentially tariff-free from Canada into the US. Like all businesses, we're mindful of the ongoing repercussions of uncertainty and people's proclivity to invest and to purchase and so on. So far, we're not seeing any negative impact from that either. I think one of the reasons is that our products are essentially essential products that go into essential services like firefighting, border control and so on. And those are markets that aren't particularly susceptible to short-term changes in terms of confidence. One of our big customers is CalFire. They're going to continue to have fires to fight in California. Another one of our big customers is the US Border Control. They're going to continue to have border control fleets and requirements going forward. So we do think we're in a market that can sustain the sort of growth that we need.
Ross, in the last quarterly, you mentioned opportunities to expand beyond traditional US markets. What regions or customer sectors are being targeted?
So there are two ways we think about this growth into new markets. One is to take our existing products into markets that we don't yet have a strong presence. And that includes South America, Asia, and Europe. We do have some sales in those markets, but part of the benefit of being a stronger company financially is that we can now put some resources to expand in those markets. The second opportunity we have in parallel though is to move from being a provider of an aftermarket product, as a product someone buys to put into an existing aircraft when they replace the radio, for example, to be one that's specified as part of the original equipment manufacturer's build of the aircraft. So whether that's Airbus, helicopters, or any of the other manufacturers, we are now in a position to start having those conversations and to design our products to their requirements and have them built into the original equipment. So those are the two growth vectors that we're pursuing.
And obviously CalFire is a significant customer for you for your aerial firefighting equipment. Is this a growth market you intend to focus on, both in the US and Canada, and more broadly globally?
Yeah, so CalFire is the largest aerial firefighting fleet in the world, and they have contracted now for half of their fleet, and we expect to get the contract for the balance of their fleet, 150 aircraft shortly. So they are a leading customer. They're looked at by other players in the market, and they will typically, in extreme emergency situations, contract other firefighting services to support them. And those other firefighting services are looking at CalFire's decision, and they are now buying our radio so that they can be entirely complementary. So it's a very, very important client. We might all regret the fact that the risk of wildfires, as they call them in North America, is increasing, but that's the fact, and so it's a growth market. Not only because there are more aircraft being deployed in firefighting, but also because the operational requirements of the aircraft are going up. You know, a very good example is the challenges that pilots have in these intense operational environments where they're listening to multiple radio channels simultaneously. One of our engineers was able to come up with a solution for the CalFire client where they can pick which frequency, which channel they want to listen to predominantly, and have that come through one earphone, whereas all the other channels will come through the other earphone. As the operation progresses and they need to switch to another primary channel, they can switch to the other primary channel. So it's these sort of small adjustments to the product to meet the very, very specific operating requirements of these aerial firefighters is turning out to be a real competitive advantage. Another example, also in California, we sell a very, very good loudspeaker system which is used on police aircraft. Our loudspeaker is half the weight of the next competitor, which is a big benefit, and it's 4 or 5 times louder in terms of the ability to be at a great height and still communicate with the ground. So much so that some of our pilots in the LAPD who use our speakers call it the voice of God.
Ross, Q3 was significant in that SMS reported positive operating cash flow. What gives you confidence that this will be sustained going forward? And how do you expect free cash flow to evolve over the next few quarters?
The Q3 financials that we released a few weeks ago are very important because it's the first evidence of what we've achieved in terms of our financial restructuring. We did the restructuring in November and December. We incurred restructuring costs, including redundancies and so on, in December, which was Q2. Q3 was our first look at the business on its new financial footing, and it's very clear in those Q3 results that the cash flow, the free cash flows are emerging as we expected them to. We'll be releasing our Q4 financial reports in a month or so's time, after the end of June, and I'm very confident they will show a continuation of that trend. That's the first point. The second point is we are now able to base all of our financial planning, and we're doing this with our budget for the next financial year, on 2 really important metrics. One is sales growth, and the other is free cash flow generation. And we're looking to 20% sales growth and 20% free cash flow generation as the guardrails for all of our financial decisions before investments. But as long as we are generating these cash flows and we have the funds that we raised in November behind us, we are in the fortunate position of being able to make some decisions about how and when to invest in new products.
Can you update us in terms of the FAA approval process and how close this may or may not be? And for those who may not be aware, explain the technology and its potential application.
As I've explained, the avionics business is very important, very valuable and growing. But nevertheless, the commercialisation of this Australian technology, Perth-based technology, CVM, continues to have tremendous future value. As the long-term shareholders know, and I sympathise with all of them, it's a very slow process to get innovation through the regulatory environment in the commercial airline business. Our current application, aft pressure bulkhead, has been in development, testing and preparation for certification for 8 years, for example. We're very close to the end of that process. The next major milestone will be Boeing issuing its complete application package, which is thousands and thousands of pages of technical testing data and so on under a whole range of different conditions. We are very confident the FAA will approve, in part because the FAA have been involved in a weekly basis for at least the last year in the preparation of this data and to meet their requirements. The timing is always difficult to predict. It's out of our control. All of our work is done. All of our test results are in. And within Boeing, at least, the technology has passed all of its technical tests. It's now just the final documentation. They're telling us that should happen within the next 2 months. They have told us other dates in the past, which have gone by. So all I can do is report the most recent advice we have from them. But that'll be a very important milestone because it will be 100% compliant. As some of you may be aware these days, Boeing is very careful not to put anything forward to the FAA that it is not 100 or 200% confident in. So then the FAA receives the application and it's up to them to approve it. I'm told that could take anywhere from weeks to months, but I can't put a better estimate on that, but it is, after 8 years, now within sight.
And the relationships with Boeing and Delta Airlines have played a key part in the approval process to date. Can you elaborate on the partnerships and what they might deliver post-FAA approval?
Yes, our partnerships with Delta and with Boeing are incredibly important, and with Airbus as it emerges, and other operators like United Airlines. We're a very small company with a new and novel technology in an industry where no one has a very strong interest in grabbing innovation. Most of the maintenance procedures and the inspections generate very safe aircraft, so there needs to be a strong push to make change. We're very fortunate in Delta because they understand the benefit to them in the case of the aft pressure bulkhead application. They will get 3 extra days commercial flying out of each one of their 71 aircraft who require this inspection every 9 months, which adds up to basically a free new aeroplane each year for as long as they're flying this fleet. Tremendous value to them. They were able to persuade Boeing many years ago that this was really important to Delta as a Boeing customer, and they asked for Boeing support to push this change through to the service bulletin stage, and that's exactly what Boeing have done. So there's a team of people at Delta, there's a team of people at Boeing who are continuing to pursue this application and honour their agreements to each other and to take advantage of this opportunity. I know that is sometimes surprising given how long it takes, but if you could see some of the detail these folks have to go to, it sort of makes sense.
And lastly, Ross, it's obviously a very risk-adverse industry for obvious reasons, but there must be frustrations with the time taken to get to this point. I understand that you're concurrently in talks and active partnerships with other major US airlines. Can you spell out what this looks like and also what it might look like post-FAA certification?
Look, I can't go into too much detail here because of some confidentiality issues, but I think I can say the next airline that we confidently expect to be a customer for the aft pressure bulkhead application is United. And I can also tell you that in 10 days' time, they will be installing our sensors on 2 aircraft to test the sensors. Not to test the performance of the sensors, which they are already convinced about, to test how easily they can integrate the sensors and the monitoring of the sensors, the installation and monitoring of the sensors into their maintenance program. So that's very, very positive. There will be others to follow, but I will not go into that until we've got a more certain commercial arrangement in place.
Ross, thanks for joining me today. I wish you and the team all the very best and look forward to chatting again soon.
Thank you very much.